So today we have on Michael Bor, the president and co-founder of CarLotz, a consignment company for vehicles that essentially makes the process of buying and selling a used car that much easier. Was that a good description?
That's a great description. Thank you. Thanks for having me.
Hey, yeah, thank you for being here and congratulations on going public. It is currently Thursday and tomorrow the ticker will change to Lots. That's correct?
That's what we hope. There are lots of mechanics like within the NASDAQ exchange. And so, all these things can always like slip a day or two, but that's the goal is we're pointing towards tomorrow, Friday is our first full official day of trading as Lots.
So
That's
I
awesome.
know you were an investment banker prior to this. Did you just have a car sale go completely wrong where you were like, damn, I have to make a whole new company to fix this?
That would be a good story too. No, I mean, I was an investment banker. I was actually really satisfied with my career. I love the guys I worked with. I just always knew that at some point I wanted to be an entrepreneur, start my own business. Kept a notebook with a bunch of business ideas. I traveled a bunch in my investment banking life. And so when I would travel, I would write down some business ideas. I'd probably write the business idea at the top and I'd try to fill up the page with a one-page business plan. And by the time I got to the end of the page, I'd usually realize that it was a horrible idea. And so if it made it past kind of page one, then I would take it home and talk to my wife about it. And then, a lot of them got crushed there. And so this one made it past the one-page business plan. It made it past the scrutiny of my better half. And fortunately, we're in Richmond, Virginia. It's where I live. And there's another used car business that is headquartered here with a lot of very successful and smart people who know the industry well. So, got the good fortune to spend some time with some of the founders and early investors in that business and really kind of learned a little bit about the industry as I was writing the business plan, which was very helpful, gave me a bunch of confidence. But, essentially the way the idea came about is, I would drive home every day from my investment banking job. And this one road that I would go down, it was a fairly busy road by Richmond, Virginia standards, but people would park their car on the side of the road with a for sale sign in the window. And it always occurred to me that was a really inefficient way to sell a car. I mean, you're relying on a minimal amount of traffic down this road to see your vehicle. Maybe you're listing it on Craigslist, so you're really exposing yourself to all that comes with the Craigslist universe, which is, hassle, time commitment, potential danger. And so what's interesting is I was an investment banker, but I was focused on mergers and acquisitions. And an M&A banker, the job is you meet with clients who have an asset, you work to professionally market their asset, and you sell their asset for them to a buyer, and then you take a fee. And so what we do at CarLotz is essentially that for cars. We meet with people who have cars to sell. We work with them to professionally merchandise and market their vehicles. We find buyers for them, we sell them, and we take a fee. And so it's actually, my investment banker colleagues, former investment banker colleagues probably don't like the comparison to a used car dealer. It still has negative connotations, as does investment banking actually. But, I think what we're doing at CarLotz is very similar to M&A investment banking, just a much smaller asset and obviously a much smaller fee.
That's an awesome way of looking at it. So I guess to follow up, you could have gone down the road of, going public by yourself. Why did you choose the SPAC route?
Yeah. So when we started the company, we raised about $500,000 from local investors. And this was 2011. And what we told our investors is we would go and, we didn't know whether it was going to work, right? This was 2011. It was basically an 80-page business plan, a 20-page PowerPoint presentation, and like me saying, never having run a business, saying, I think I'm going to turn this into a big company. So not surprisingly, a lot of people were like, you're kind of crazy, anyway. So we raised the money, but we told our investors back then that what we were going to do is we were going to grow this business and we wouldn't seek additional capital until we either made money or were darn close to it. And so at each capital raise, that's what we did is we would try to create a profitable business. And when we got close to it or achieved it, we would go and raise additional capital. So we did that in 2012 with our second round of capital. We did it in 2014 with our third. In 2017, we partnered with TRP Capital, which is formerly, officially Roger Penske's private equity fund, but since has kind of spun out, but still affiliated. And we raised kind of the headline number was 30 million, but we were going to take it in tranches, and we ended up taking about 20 million by the time we got to a point where we were like, okay, we've now gotten it back to profitability, or close to it, depending on how you look at profitability. And we said, hey, it's time to raise more money. But where are we now? We started as a local business. We made it regional. We made it super regional. We made it semi-national. We've now opened in markets where nobody knows us, and the openings have been successful. We know how to open new hubs. We know how to bring on new accounts. We know how to sell cars well. We know how to source cars well. Let's go for the big raise and the big growth. And so we built a plan that essentially takes us to be a national business, a multi-billion-dollar auto retailer, and it required an amount of capital that a traditional way IPO doesn't really get you. A traditional way IPO, you typically raise $100 million or a little bit, and then you go public, and then you use subsequent rounds to continue to raise capital. But this going the SPAC route enabled us to raise an amount of money that was going to take us through our growth plan, and it enabled us to also partner with this group, Acamar Partners, which is a group of very seasoned, successful investors that have decades of experience investing in and growing multi-billion-dollar consumer and retail businesses. And so it just seemed to make sense. The bankers were that we were working with, very positive on the concept, and there was a tremendous amount of interest as we went through the process. So thrilled to be at this point in the process, hours away from closing, hopefully, and hours away from trading on the NASDAQ as LOTZ.
Yeah. One thing that you just touched on was how you plan to go nationwide. Right now you have, I believe, 8 locations in 5 states.
That's right.
I don't want you to give away your whole super business plan, but location-wise in 2 years, not just number of locations, but do you plan on expanding in that short amount of time?
Yeah. So we're currently in Virginia, North Carolina, Florida, Texas, and Illinois. We announced, I think last Monday or maybe the Monday before, we're opening in the Seattle area and in the Orlando area. And our plans are to open 3 to 4 new markets per quarter over the next several years. And there are really 3 reasons why a new market or new location is attractive to us. One is it gives us access to a totally new market. So, for example, Seattle is a totally new market for us. We don't source vehicles from the Pacific Northwest. We've sold vehicles into the Pacific Northwest, but certainly not as many as we will once we're more established in the region. And so it's essentially a total add-on, doesn't kind of combine with any of the current business we're doing. The second reason is capacity. So, for example, in Virginia, we're at capacity. We really can't take another vehicle. We have limited parking spaces across our hubs. And so we are seeking additional locations in Virginia, even though we're already in Virginia, but just to give ourselves more capacity to take in more cars and sell more cars. And the third reason, which I think is the most interesting, is really cost savings. So right now we have clients who send us vehicles from the Northeast for us to sell, but to do that, they have to ship them to one of our locations. So our closest location to, northern Pennsylvania might be Chicago or Virginia, and that might be $600 or $700 of shipping. So if we open in, let's say, Massachusetts, and shipping to our location goes from $700 to $300, then our clients save $400. The value that we add to them goes up by $400 just by having that extra location. So a lot of these new locations are really exciting because the value that we already provide to our clients will go up because their cost of shipping will come down. And so we're thrilled about this capital that's coming into the business, our ability to use that to grow the business, attract more vehicles, reduce the costs of doing business with us for our clients. It's very exciting.
Yeah, that's awesome. So you guys have seen ample growth, just massive growth. And part of that is due towards, I would assume, towards the used car bubble, some are calling it right now. They've seen a huge increase in the amount of, used cars that are being sold. And obviously that drives, supply and demand. So how do you think that this will play into your growth? And do you expect that some of your growth to decline as this bubble, used car bubble, declines?
Yeah, I would, we've been in the industry now for almost 10 years, and I would probably argue with the used car bubble concept. If you go back, there are essentially 40 million used cars sold every year. If you go back 2 decades, it's pretty much 40 million every year. In the depths of a recession, in the peaks of a boom, it might go from 40 to 39 or 38, maybe 37, it might go from 40 to 41 or 42. But what I love about the used car industry is it's remarkably stable. It's a need. It's not a want. I mean, people can adjust how much they pay. They can adjust whether they finance it or pay cash. But at the end of the day, they need a vehicle to get to work. They need a vehicle to take the kids to school, to go to church, et cetera. And so what we've seen is what changes in the used car market is pricing. And so, if you're feeling flush, everybody's working, unemployment's low, you might buy a $30,000 car instead of a $20,000 car. Or if you're out of work and your car breaks down, you might go from your $20,000 car to an $8,000 car. And so that has implications for dealers that trade on pricing. We sell cars for people at a fee. And so, and the fee is flat. And so whether we sell a $30,000 car or an $8,000 car, there are some minor differences to us, but we're going for that volume, and that volume has been remarkably steady over time. So what we've seen recently, and maybe this is to your bubble point, is we have seen pricing go up for the same car. So like the same car that was the exact same car, just 1 year different, that was sold for $18,000 last year might be $19,000 this year. It's not $18,000 to $28,000. I mean, it's they're minor differences. And so we've seen some average selling prices go up with our peers and with us. Our average selling price has actually gone up fairly dramatically, but that's mostly because of some new clients that we've brought on that have shifted our average selling price up. We've brought on clients that bring us $40,000 and $50,000 and $60,000 pickup trucks and luxury vehicles, whereas if you go back 3 or 4 years, we were primarily in that $13,000 to $15,000 average price point. We're now, north of 17. So there's been some good price appreciation, but at the end of the day, we're looking for that volume, and that volume has been remarkably steady.
So with the growth that you've kind of been experiencing, do you kind of expect, and continuously speaking about the used car market, do you kind of expect it to be flooded with non-EV cars in the next 5 to 10 years, especially with how it's been going recently?
Yeah, I mean, I personally love the shift to EV. There's some great EV vehicles. There's some great both highline and kind of everyday vehicles that are coming out. They're EV. The whole shift to EV, I think, will probably be a little slower than some predict. It does have an impact on the industry, but mostly on the franchise dealer side of things. Franchise dealers actually make quite a bit of their money on parts and service, and electric vehicles require fewer parts and less service than an internal combustion engine vehicle. And so that will definitely impact, new car franchise dealers more than the used car sellers. At the end of the day, an EV for us is the same as a, internal combustion engine vehicle. It's a car that we can sell. We are, putting in more charging capabilities at our hub locations to manage through what we think will be a slow and steady rise of EVs going through the used car market. If there's a more dramatic or faster shift to EV, there might be some more depreciation or lower residuals on regular internal combustion engine cars. But that's something that we're thinking through real time. But yeah, no, it's really interesting. I think, if you go back probably 2 or 3 years, there was a report that came out that, essentially said that between electric vehicles, autonomous vehicles, and car sharing, that the traditional dealership model will go away. And by like 2022 or something, it was a prediction of this dramatic change in the way cars are bought and sold. But what we've seen over time in this industry is that this is a very old industry. It involves 100 million cars that are out on the road being used by people. It's just not hundreds of millions of cars on the road. It's not an industry that just moves very quickly in any one direction.
Yeah. One thing that my actual previous job was working at a company that did training for cars, RVs, and boat dealerships, and also the service industry. And that was one of their constant concerns was it with cars being delivered, what are we eventually going to do? But a lot of the dudes there that had been there forever, and it was a small company, but they were so confident that this wasn't going away. And I think that may just be a car dealership.
Well, yeah, I mean, some people like have confidence in their industry not changing because they don't want it to change. And you can think back to like Blockbuster, what they were thinking back in the day. I think the change in the industry, we see there's change. I mean, I'm telling you, there's change. More people are buying EVs today than ever before. And that will continue to happen. I think what I'm suggesting is that won't necessarily have as big an impact on the dealership market as, maybe some predict.
Yeah, I feel like just the aspect of going to a dealership and test driving it and instead of just buying it. But then again, I mean, ordering everything online just seems so weird just 15 years ago.
Yeah, no, absolutely. I mean, I think when we think about so we have this Omnichannel experience where you can buy a car fully online and do it all, from your desktop or mobile phone, or you can actually come in and deal with some of our coaches and work with our people. So it is truly omnichannel. When people say they don't want to go to a dealership or they talk about the slimy dealership or, I don't want to, people remember kind of the 70s or 80s caricature of a guy in a leather trench coat sitting out front of the dealership, smoking a cigarette, waiting for the next victim and, pouncing when you show up on the lot and then being stuck in the finance manager's office for 4 hours and the coffee's cold. And, that experience is, it's largely a caricature. I know one of our competitors still uses it in their ads, which just, I don't know, most, if you cut the dealers between those doing it old school and those doing it the new way, there are plenty of dealers that provide a wonderful level of service and people have a great experience. So if you take the fact that old 70s or 80s caricature is going away, what does the guest, the car buyer really want? They want a good car, the right car. They want it at a fair price. They want to be treated fairly and with respect. And so if you can do that in person, or you can do that online, or you can do it both so that someone begins their journey online and then transitions to maybe they want to see the car before they buy it. We think there's a model there that leads with treating the guests with respect and fairly and provides them a great product at a great price that we stand behind. And then how they want to do it, whether it's fully online, fully face-to-face, or somewhere in between, we actually don't care. We want to provide them the same level of guest experience, regardless of how they shop. And I think that's key. I think there are lots of people who are coming at this with online only. There are lots of people who are saying, let's try to keep people going to our store because we have people there and we have infrastructure. We're truly agnostic. However you're most comfortable buying a vehicle, we've created an experience that will wow you.
So you did just touch on competition. How do you guys feel like how do you compare to your competition? There was a different company that went public recently. First three letters are the same, actually. And just how do you differ from them? And with that being said, do you see your size, or do you ever see CarLotz growing to the size of something like Carvana?
We have a ton of respect for all the guys who've gone public in this space have done amazing things. They've transformed the industry. They've taken it forward. They're providing phenomenal experiences to car buyers. So really, I think there are a lot of old school car dealerships that are still on a dirt lot with a chain link fence around it and no website presence, no transparency of pricing. I think there are a lot of car dealers that need to get with the times or move away from the industry or kind of find something different to do. There are plenty of dealerships and dealer businesses, auto retailers that are doing a wonderful job. And I would consider all of our public peers in that space. Where we differentiate is we source our vehicles differently. Obviously, we are a consignment business at the core. That's how we started, and that's how we are today. And so we provide a service to the seller. We sell their vehicles for them for a fee. And we do that by providing a wonderful experience to the buyer. They can get a great vehicle that we stand behind at a fair price and be treated fairly. And so, fundamentally, where I'd like to compete with all these other great companies is on service. I want people to leave their CarLotz experience and say, holy cow, like I'm never shopping anywhere else for a vehicle. And, we don't always we step in potholes, occasionally. We're not 100% doing that today, but that's our vision is we want to make sure that we're creating the world's greatest automotive retail experience. And I think by doing that and continuing to offer great vehicles at a great price, we will compete very favorably with everybody else in this space. The beauty of this industry is that it is not a winner take all, and it's not even a couple winners take all. It's not like Home Depot and Lowe's or, even McDonald's, Burger King, and Wendy's. It's there are thousands and thousands of dealers. The top 100 of them only account for 6% of the volume in the market. And so there's room for a Carvana to sell 1 million cars alongside of room to sell 1 million cars, a CarMax to sell 1 million cars, and a CarLotz to sell 1 million cars. And so that if all 5 of us sold 1 million cars each, which is way more than any of us sell today, even the largest, we'd still be, about, I guess, 12% of the market. And so there's a lot of room to grow. I think we're all going to be growing very quickly. Our job is to grow faster, and we're doing that currently, and we're going to keep doing that. So yeah, we'd absolutely love to be the largest player in the space one day.
Great.
Definitely. And from, an investor standpoint, one of the biggest things that investors worry about is 2 things. Is one, getting an offering or a secondary dropped on them, at a discount. So how much capital or how long will this capital last you? Will you be looking to raise within the next year, next 18 months?
So, like I said earlier, it was important to us to raise an amount of capital that would allow us to execute on the growth plan that we've laid out. Our growth plan has us adding 3 to 4 new hubs a quarter over the next several years. That is all doable within the bounds of the capital that we're raising through this transaction. And so we as we grow, and we're a fast growing business, as we grow, there are certainly going to be opportunities. And so I can't come here today and say we will not raise additional capital. If there's a reason for us to raise additional capital because there's a new opportunity that's outside of the bounds of the business plan that we put out there, we will absolutely, to the extent it's a prudent thing to do for shareholder value, we'll absolutely do that. But in terms of the plan that we're currently executing, it does not require capital in excess of what we're raising in this transaction.
Definitely. Just my last question was going to be about the share structure between, ACAM and CarLotz. Do you feel that the share structure is fair and will maximize shareholder value?
Yeah. So, the way it plays out in this transaction is the ACAM, at the end of closing, the existing CarLotz shareholders will have a little under 60% of the business. The ACAM shareholders, including the ACAM shareholders and the ACAM sponsor will be about 30% of the total. And then the PIPE investors, there's some strategic and some financial, will be about 11% of the business. And so, we think we and the market seems to think this is a very fair deal. We're thrilled at the outcome, and we're excited to kind of put the deal behind us and go forth and execute on our vision.
Perfect. Well, one last thing before we get you going. if there's anything you want to touch on about the future of CarLotz, plug it now. It's time.
Well, thank you for giving me the opportunity to speak with you guys today. I would love for everybody who's listening to this to consider us as an option when they are looking for vehicles. I think we compete tremendously well on price, tremendously well on service and experience, both online and in person. And so, yeah, I mean, if there's one thing that comes out of this is that a bunch of your listeners check out our website and buy some cars from us, I'd be thrilled. We're absolutely, as a team here, we are super excited to get this transaction behind us, go forth, open these new hubs, take what we're building across the country to so many more potential buyers, potential sellers. It's absolutely going to be thrilling. One thing that we didn't touch on, actually, thinking about it, is so, we started as a consignment vehicle for the consumer. A lot of our business is now with corporate sellers of vehicles, but still 15+% of our business comes from consumers that are looking to consign a vehicle with us. And what that means is, as a consignor, you're not taking the dealership offer. You're not dealing with the hassle of selling it yourself. You're basically getting more money and not having to deal with the hassle. So again, in addition to being a great place to buy a car, we're a phenomenal place to sell a car. One of my favorite taglines for this company is "more money for your car, more car for your money." And I think that's a great way to end it.
Awesome.
All right, perfect. Well, thank you so much for joining us. Anytime you want to come back on, just let us know. And congratulations again.
Thanks, guys. It was a pleasure to be on with you.
All right.
Thanks, Michael.